Welcome to Advisor, where we talk about all things investing. In today's video, I'm going to talk about the 7 different asset classes that you can invest in. All investments fall into these 7 categories, and I will go into detail into each one and explain how you can invest in these categories if you want. Almost everything in this list can be purchased in a retirement account or a brokerage account. Almost. Without further ado, let's start with gold. Gold is one of the oldest asset classes and most universal and well known. While not very practical, you can own it as gold bars. Only slightly less impractical is to buy gold coins and keep them in a safe at home. The easiest way to buy gold is by purchasing an exchange traded fund, or ETF, that tracks the price of gold. You can buy ETFs in your brokerage or retirement account and set it and forget it if that's what you want to do. That way, you don't have to worry about storing it, and you can get the benefits of the price movements of gold. Some people buy gold as a hedge against inflation or to protect against the downside of the stock market losing value. Next is real estate, as old and universal as gold, but not as standardized. You can buy houses or commercial property and either sell it later or keep it and rent it out for income. Real estate is not very liquid, so it can be hard to sell it if you need money quickly, and managing it requires a lot of overhead, both money to fix issues with properties and time to spend managing it. You can buy ETFs that invest in real estate, and there are other stock traded entities called REITs, which also invest in real estate. That way, you don't have to worry about tenants calling you at 3 in the morning to report a broken air conditioner. Next up is commodities. Commodities are similar to gold, but gold is special, which is why it's in an asset class all by itself. Other commodities like oil, copper, orange juice, etc. belong together. You could buy commodities physically, but there are challenges to storing barrels of oil in your basement. Instead, most investors will buy commodities via futures contracts, a contract where you pay a price now to receive a certain commodity in the future. If the price of the commodity goes up, you can sell the futures contract for a profit without ever having to physically take delivery of the hard asset. However, buying futures requires active management. So a simpler way is, you guessed it, to buy ETFs that track the price of commodities. There are ETFs that track the prices of copper, wheat, even palladium, and many others. All right, the next asset class is more well known, and that is stocks. These are companies that anyone can buy on a stock exchange. For this reason, these companies are called public companies, as opposed to private companies that do not trade on a stock exchange. You can buy stock in individual companies, or you can buy hundreds of companies at once by purchasing an ETF that tracks indexes like the S&P 500 or the NASDAQ. Many people invest in stocks for retirement, and it's one of the easiest investments to buy. Now, after stocks are bonds. Bonds get created when a government or company wants to borrow money. When you buy a government bond, you are loaning money to the government, and they are promising to pay you back with interest. It is possible to buy bonds in a retirement or brokerage account, but it can be cumbersome. So instead, you can buy ETFs that manage all of the bond buying and selling for you, so you can sit back and receive your monthly or quarterly dividends. Options are the 6th asset class and are a little more complex. The two most well-known options are call options and put options. You can buy or sell call and put options that are tied to specific companies without owning the stock of that company. It's a way to get exposure to the price movements of a stock without owning it. To simplify, a call option makes money when the underlying stock goes up, and a put option makes money when the underlying stock goes down. This allows investors to have a true mathematical hedge for when their stock portfolio goes down. Now, options are an asset class where it's harder to get access to through ETFs, but that is changing. Options should only be used by investors who understand them fully and know how to manage them. Last and not least, we have alternative investments. This is a catch-all for everything else. This includes private equity, which are companies that do not trade on the stock market, angel investing, crypto like Bitcoin, and collectibles like art, cars, wine, and Pokemon cards. I know some people would argue that crypto is its own asset class, but I would say that is yet to be proven. There are some ways to get exposure to collectibles in a retirement account through ETFs, but not for everything. I've yet to see an ETF that tracks car collections. If you made it this far, thank you for watching. If you have any questions about any of the asset classes or want more information, feel free to comment and we can make a video answering your questions. Also, you can check us out at advisorbot.com. Thank you.